Let's talk security, current affairs, governance, politics, your view, elections, rule of law, economic issues, foreign events on the Talking Point. Talking Point, weekdays on this channel. With so much happening in the country today and so much going on in different sectors of the economy, we're going to be focusing on the petroleum subsector today, as well as matters arising. So on the 29th of this month, news greeted us that Dangote Refinery will soon begin importation of crude from the United States. That'll be in the coming days. And of course, that is supposed to boost our production capacity. Now, there are fundamental questions to this. That on one side, the FX issues, the undulations, fluctuations with regards to the currency, the FX and whatnot, how all of this is going to be affecting importation of crude as well as the transaction of the oil business. We'll look at that, as well as the state of the refineries. How soon do we begin to enjoy supply as expected? Because of course the one that's closest to supply, closest to production now is the Dangote Refinery, which I started out by telling you will begin importation of crude from the United States in the coming months. That said, these issues are what we're going to be focusing on today as we discuss the petroleum subsector and matters arising. I am Ikechukwu Jue, and to discuss this with me is my guest who's already standing by and ready to make sense of the conversation. Virtually joining us from Lagos, where he is. He's an oil and gas expert. I'm talking about Dr. Wisdom Enang. Dr. Wisdom, you're welcome. Dr. Wisdom, can you hear me?
Yes, I can hear you. Can you hear me?
I can. You're welcome.
All right, good. Thank you very much.
So, Dr. Wisdom, let us understand, with the information that greeted us on the 29th of this month, that Dangote Refinery will begin importation of crude from the United States in coming months. Questions begging for answers. First question is, why import crude? Do we no longer have crude that we will begin to import crude from the United States?
Thank you very much. So when you're looking at, the volume of crude that the Dangote refinery needs to run on in order to avoid any sort of, a breakdown of that plant, you will find out that, as I said before now, that we do not have that much crude to offer the Dangote refinery, and I've said this before. And the reason is this. When you look at our crude volumes, I keep saying, if you look at it, the amount that is being produced on a daily basis, out of that, you then have the quota that is going to go to the oil companies that are producing. They take their quota. And out of that quota, the remaining one is either the quota to the government by virtue of the joint venture agreement, or you have the quota that is coming to the government through the oil and gas companies paying for what we would call it royalties and taxes, using oil equivalents to pay for it. Now, when you look at that much, you also understand that Nigeria needs to balance its FX needs. Nigeria needs to balance the need for, to pay its bills in foreign currency. So you will know that out of the government marked crude, you have some of it going into forwards contracts, which has been already pledged for the next couple of years by several governments in the past, and even the current government for the 3.3 billion AFRISM loan. You then have the remaining being sold for FX. So I've always said it before that we may not be able to have the quantity of crude required by the Dangote refinery for it to continue to process and run efficiently. Now, the thing is, how were we even able to raise, I think, the millions of barrels of crude that we gave to them, it was through cancellations of the what would call the crude swap contracts. Before now, we used to swap crude for refined products. And so we've canceled that, and we've been able to give him that amount of crude. I think it was 6 million barrels, I think we're planning to give. The last I checked, we gave 4. I'm not sure whether we've been able to give the full 6. But, this is just to tell you that we don't have that continuous volume. And this is what worries me. What worries me is this. Scenario number 1. If the Dangote refinery gets crude from the U.S., what does that mean? Is it still bound by any sort of domestic supply obligation to bring crude to supply refined products to Nigeria to cushion the supply situation that we've been experiencing, and of course in the long term modulate the price? But the fact that it's now having to source FX and buy crude from the U.S., what does that even mean in terms of pricing? Will its crude be so much high that we may not be able to buy it at the current rates in Nigeria, and then we may have to head out? He may have to go sell it in Ghana somewhere where it may be more affordable, more profitable for him. What does that mean? Does it also mean that the government, how is it sourcing its FX? Is he having to source that amount of FX in the official market, or is he sourcing it by himself? And then what again happens to the 6 million barrels that we're planning to give to him? Is there a way that we can quantify for every barrel we give to him how much domestic supply obligation that attracts, meaning how much of refined products needs to be sold in country at the prevalent price before he can think about exporting it? These are things that I sort of saw coming. Wasn't quite sure how the government were planning to address those concerns.
You've asked very fundamental questions in your analysis, and I intend for us to explore them one by one. Now, you talked about this whole process of importing crude. Can you help us understand? Because I'm still trying to wrap my head around it. Is it that we do not have enough crude? Is it that the soil is getting dried up? We don't have enough crude to supply Dangote refinery because of its capacity, or what? I'm yet to understand.
No, I think what's going on is we do have crude, but what we have is what I would call the crude is just proven volume. So when you have a proven volume, the problem with proven volumes are that they're what it is. It's not out of the ground yet, so you can't take credit. So we keep hearing things like I think it's 39 billion barrels of proven volume, but they're not out of the ground. Now, I'll tell you what. I'll run you through how the crude recovery works. So at the early stage, for most reservoirs, you would have what we call natural reservoir drive, which is that the reservoir has enough strength to bring up the crude. So you do very little to get it out. The second stage is where we talk about the primary recovery techniques, which is where you talk about different gas lift technologies and gas injection to get out that crude. Again, you're simply trying to reduce the sort of inertia against that crude to allow the crude come up. Then you have the secondary and the tertiary recovery methods, which, of course, in Nigeria is not very prevalent. Now, what has happened is this. We have been relying on, on natural drive for a long time. And a lot of our reservoirs are going down in their strength, meaning they will benefit from primary recovery of crude. However, I don't think that's going on a lot. And interestingly, the time where we should be putting out investments towards primary recovery of crude is sort of interestingly coming together nicely with the divestment experience. And when divestment happens, all technical sort of expansion plans would typically pause, and we will now be talking about things like the contractual cycle to actually divest. So that means companies will definitely pause their expansion plans. And if there is any well that is not perhaps driving itself naturally, they will shut it down until such a time where the divestments are over. And even when the divestments are over, the attitude of most of the buyers is simply to just keep producing the oil from the existing wells. They're not looking at expanding. They have a loan to repay back, and they simply want to get money and repay that loan. So what am I saying in essence is that a lot of our crude volumes are just proven. They are not actively being produced. Now, what even worries me more is that a lot of the wells that we're exploring today at the moment, and we're taking credit for today, are wells that were actually explored in the 1980s. I mean to say that we're producing today. They were explored in 1980s, and that's really worrying for me. The question is that just imagine how many of these proven volumes that we could have added to our barrels. Imagine how many of the actual wells, drilled wells and producing wells that we could have added to our barrels. That's eating our lunch in one end. On the other end, theft is eating our lunch. Now, having all theft that is causing that, I think a lot of investors are thinking, I don't want to get in here into these areas where there's theft. We're having Shell pull up and say, they don't want it anymore, even though they didn't say their reasons are for to rebalance their energy portfolios. But we know that theft and the environmental problems they're facing is top on the list of some of those reasons. So you find out that a number of things are eating our lunch when it comes to the production volumes that we should be having. And definitely we're not scratching that surface. Now, I tell you interestingly, IK, we've been drilling oil for in upwards of 60 years. But it is only recently, 2021, July, that the Petroleum Industry Act, August, I mean to say, that the Petroleum Industry Act had mandated that out of the interests of, I think some of the interest from the money from the NNPC, that part of that should be earmarked for exploring frontier basins. I can tell you without a doubt, sir, that we have, not had that conversation. That part of the Petroleum Industry Act has not even been implemented. And you may ask yourself, why the NNPC? Why not the other oil and gas companies? But I tell you what, the other oil and gas companies are in the business of producing and making profit. It is typically like the Saudi Aramco of Saudi Arabia, the NNPC that should be leading the charge when it comes to exploring and making more findings on whether it's gas or oil assets, for us to begin to do some exploratory production.
Okay, Dr. Wisdom.
The thing is this,
Dr. Wisdom.
You find out that...
Sorry to interject you.
Yeah.
In your analysis, there was something you said that struck me, and that's prompted a question. And I'd like to ask, is it that we're not discovering new grounds? Because you talked about how long we've been, exploring from some of those wells, which have been there since the 1980s, as you said. We are not exploring new grounds. That's one. Two, with this whole thing with Shell pulling out, does that have any implication with our production capacity?
All right. Two good questions there. Thank you very much. Answer is, first one, we're not exploring new grounds. I think our mindset was mainly economic rent. What do I mean by that? Economic rent is simply whatever can comfortably come out of the ground. We're not going to ask too many questions. We're just going to have it and sell it out. That's the first one, and that's very frustrating for people like me who sit advising that you need to start making hay while the sun shines. So we're not. And even to contextualize the problem even further is the fact that, as I was saying, it is out of the 60 years that we have been exploring oil, it is only in 2021 that we enacted the Petroleum Industry Act that put a very concerted effort towards putting our money intentionally intentionally towards exploring new frontier basins. And that was the mandate for the NNPC. And I'm telling you, not only are we catching up after 60 years, but even 2 years after the Petroleum Industry Act, the NNPC has not told us whether or not there's any funds available for such explorations or whether they've kept any funds apart. We do know that they reported very fantastic profits, but we don't know if there's any stewardship on the funds that should be earmarked for exploring the frontier basins. That's on one part. I think, what was your other question again?
The other question is with Shell pulling out. Does it have anything to do? Will it affect our production capacity?
With Shell pulling out, let me tell you what's going to happen with Shell pulling out. Well, so let's give credit to the new buyers. They're made up of the team, the technical team. I do know them very well. They're industry colleagues, and of course they have worked for Shell before, so that's a good one. However, let me tell you what's going to happen. We're going to be able to keep producing those wells, but I can tell you for certain there's not going to be any expansion projects to boost the production in a while. And I don't need to know the particular mindset of the buyers. I just need to know the body language of investors. Most times they just come and they have a loan to repay. Sometimes they got that loan at a very high premium. They have to pay back very quickly. So it's just going to be as many wells as can produce with their baseline reservoir drive. Let's drive, and get the oil out. That's going to be the attitude. Now, before you start talking about expanding the production from those wells, you're going to be talking about the next 3 to 5 years, when we would have paid off a substantial amount of the loans back. Now, coming to the next conversation, what is going to happen to Shell? Then Shell is planning to go into boosting their deep water production as well as their gas production as well. Now, the question is going to be, let me tell you one thing people should know. This is a lag, what we call a lag investment. So don't expect Shell to sell on day 1, and on day 4, they're already boosting their production on the deep water end as well as the gas end. What is more plausible and is going to happen, my friend, is this. Shell is going to sell on day 1, and they're going to wait until the volatility in the entire Nigerian economy comes down before they begin to think about investing in the rest. Now the question is, during that period, what's going to happen to our production? Your guess is as good as mine. Every day, the reservoirs mature, and they're bound to decline in their reservoir pressure and the output volumes. So what's going to happen is that without any concerted effort to expand production, we're going to have a dip until such a time where production begins to expand.
Let us come back to Dangote, because you did talk about Dangote's importation of crude from the United States there, and you talked about how he's going to be sourcing his own forex and whatnot. We'll talk about the forex crisis that we're currently experiencing with the fluctuation of the naira. But let's talk about the Dangote issue. If your analysis is anything to go by, does that put any problem around pricing if Dangote is left alone to do the sourcing of his FX?
Yes, it's going to be. So here is what, there are 2 scenarios that come to mind. The quick answer is it's going to affect pricing. If Dangote is left alone to price, here's what's going to happen. Dangote would say, well, we'll tell the government, with all the things that are put into consideration, this is how much I can sell refined products. Now, the question will be, the federal government are going to say, okay, can you go ahead and do that, sell at that price, that's favorable for us. Or the federal government will simply say, well, that's not favorable for us. You can sell it, but don't upset the price balance that we've set in the Nigerian market. If you want to sell at that price, sell it in other countries, not in Nigeria, so that you don't throw the price balance out of equation. That's on one part. But if the government comes and say, well, we will give you X amount of crude, but for every barrel, this is the domestic supply obligation that we expect. for you to supply to the off-takers in the Nigerian market, who will then supply to retailers and who then supply to domestic users and industrial users, then the government could say, well, we'll give you this crude under this sales term, under perhaps this pricing context, which will put into context the currency and the exchange rates. We'll give you this amount of crude. This is a domestic supply obligation. And whatever you source from outside, refine it and do whatever you want separately. We don't have a business with that. But make sure that the ones that we're giving you, this is the supply obligation that governs it. I see that happening. That's a possibility. And that's something that the government could also do. So it creates a sort of, a domestic supply obligation with some level of flexibility to allow Dangote to do whatever he wants with whatever he sources from externally.
Okay, now, another question. Where does all of this place our refineries? Because, I mean, you and I spoke about the deadline for the Port Harcourt refinery, which was supposed to be in December. And as we speak, it's it is just a phasal completion that we know of. And it's not ready for production yet. So where does all of this put Nigerians, especially with the expectation on our refineries?
Okay, so I mean, I've said it before that the Port Harcourt refinery was actually the maiden version of the rehabilitation that had been done in recent times. I've said it before that what you would find is, even with the dates that we're given, fourth quarter is when we're expecting the weight commissioning, which is the next phase will start up. And then I've told you before that we still don't have supply. I've told you the devil is in the detail. If we cannot talk about the supply situation, we will still have another headline, breaking news, the Port Harcourt refinery are perhaps importing from India. Who knows? Maybe they're buying from someone who has bought from someone. That's what I'm trying to say. India doesn't produce crude, but not in large quantities anyway. But they buy a lot from other people. So who knows? We might be going back to buy the crude that India bought from us. But it's just, it's an irony, really. And it's very laughable, and a sarcasm, if you want to put it that way. I think putting the date, I look at the date, and the sanctity of that date relies more on what are the imperatives that are ready to drive that stewardship. And without the imperatives, my friend Ike, we cannot meet that stewardship. You see, you have an aim, but the objectives that you steward will tell me how close you are to the aim within the time frame that you had earmarked for that aim. And I can tell you that the conversation about supply is still missing. I don't see that startup happen in 2024. Correct me if I'm wrong. If people have other superior arguments, I can listen to it. And certainly, I see us still have a supply problem when that refinery and other refineries come up.
So how do we come out of this quagmire? Because, of course, it's not enough for us to talk about getting the refineries up and running. I mean, we're doing the phase of repairs. We've done one phase now. We're expecting that we'll get to the next phase and then pick up on the other refineries. How do we come out of this supply quagmire? Because the last time I hosted you, you did talk about the complexities around the supply chain. So how do we come out of this supply quagmire now?
Now, I think if we're coming in on what we call a FIFO basis, first in, first out sort of basis, the first one to come has been the Port Harcourt refinery. I don't see them have a problem. I'm just hoping that before the rest come into stream, that the government would have boosted their production. So if you're asking how, that will be how. So let's plan. I mean, the Port Harcourt refinery, I don't think they will have a problem. Just because the Dangote refinery has found a way to meet its supply deficiency if it comes to that. So we can sort of, if it comes to that, we can rob Peter to pay Paul. By Peter, I mean the Dangote refinery, and by Paul, I mean the Port Harcourt refinery or other smaller refineries.
So you deprive one, you deprive one for the other. Dr. Wisdom, are you there?
Hello?
Yeah, I said you deprive one.
I'm there.
You deprive one for the other. Is that what you mean by robbing Peter to pay Paul?
No. No, what I'm simply mean is that if it comes to making sacrifices, that's the order. I mean, we don't hope it comes to that. That's not the best case scenario. But I'm just saying, if it comes to that, and I have reasons. We have more. I think the Nigerian government has more control over the Port Harcourt refineries or other refineries that were, of course, under their stewardship. They are under the stewardship than the Dangote refinery when it comes to supply and pricing. So I would go there because it would be easy to align your pricing format as well as your supply, intentions with those refineries. And then, of course, if those refineries are perhaps very well fed and they're producing very well, the Dangote refinery comes in. It's just because of how it is easier to control and make it work in terms of flexibility.
All right, Dr. Wisdom, we'll come back to you. For you, the viewer, we're talking about the petroleum subsector and matters arising. Our guest is Dr. Wisdom Enang, an oil and gas expert. We're trying to make sense of all of these conversations coming out, especially this period around Dangote refinery importing crude. I'm trying to make sense of it. And I believe our guest has been able to make sense of it. And then we're talking about some other matters connected therewith, the supply matters, the refineries and whatnot. We'll go on a short break. When we return, we'll talk about the FX situation and how all of this can affect pricing. Stay tuned. This is Talking Point.
Welcome to the rule of the majority, a government in which the supreme power is vested in the people and supervised through a system of representation. Democracy belongs to the people. Political Trail follows these developments and many more. Political Trail, trailing political developments.
In a world of overwhelming voices where everyone has different opinion on different issues, it is important that we bring the core issue to the fore. Join me, Nancy Banigo, on Softline as we lend our voices to inform and influence your thoughts and actions. This is not just mere talk, it is an invocative program that touches the core of our existence.
Life is a combination of colors and experience in its beauty. The Lifestyle Gallery showcases the beautiful blends of African lifestyle, a TV magazine of lifestyle, food, homes, and fashion, combined with interesting interviews on trending issues. I am Nana Abena. Welcome to my world. Join me every Saturday at 2 p.m. and a repeat on Sunday.
Nigeria is a great country, blessed with human and natural resources. Born on October 1st, 1960, and like a child who's grown into an adult, has faced her own share of challenges. But Nigeria has the capacity to fulfill her destiny. With great minds and great leaders, a bright future is guaranteed. Though tribes and tongues may differ, her beauty is in the diversity. Her power is in the unity. Nigeria, our country, is for you and for me. Let's make it the Nigeria of our dream. Advocate Broadcasting Network, a part of you.
Welcome back. You're still watching Talking Point on Advocate Broadcasting Network, channel 140, and of course on Strong Decoder, channel 28. Star Times, that is, on 140. Now, my guest before the break is Dr. Wisdom Enang, an oil and gas expert. We're talking about the petroleum subsector and matters arising, and we're still looking at the issue of, importation of crude vis-a-vis the refineries and whatnot. Now, there's an aspect we need to talk about, and my guest is already waiting for the question. So let me go straight to it. Dr. Wisdom, let me come to you. The issue of FX.
Yes.
We're having, take or leave, some kind of FX crisis. with the depreciation, as it were, of the naira and the fluctuation, because 1 minute it's rising, the next minute it's going down. I think I said today selling for almost 1,500, if I'm not wrong, as at the last check. Now, with all of this FX crisis, does it put any pressure whatsoever on both supply, on production, and on pricing? 3 questions in one.
Yes, it does put pressure. And it depends. You see, a lot of things are shrouded in secrecy. We don't even know if there is a backdoor that the, for the government to still leverage a preferential rates to still import these products. We don't know that for a certain. But under classical economics, it should, because the interplay for an imported product of FX for an imported product is a very huge one. It's a critical factor. So it definitely should. What was the other question?
Well, I asked if this FX crisis with the fluctuation is going to have an impact on what you call it, supply, pricing, basically. You know, I asked 3 of them in one, but 2 for now: pricing and supply.
Yes, it would have impact on the pricing. It would have impact on the supply if not well modulated. And I'd like you to understand something. Right now, the NNPC are playing the interventionist role, and so as I said, they could have a backdoor preferential rate at which they are getting products and selling. If not, we should expect an increase in pump price. But if they're having that, then there's something shrouded in secrecy. We're not aware. We don't know how they're doing it. Some government magics, perhaps. But yes, under normal circumstances, it should have more influence on price. Where it would have influence on supply is where, perhaps because of the exchange rates, we cannot get as much volume as we should have gotten, and then you start having scarcity. Then you would now have the scarcity driving its own price hike. So yes, both of them, it would have an impact more so on the price than if it has on the supply as well. That's a double whammy.
Is there a way that this situation, especially with the FX crisis, can it be salvaged so that we do not experience any hike anytime soon? Because, I mean, as we speak now, the problem of hike may come in, and Nigerians are not prepared for that.
Oh, okay. I think you've asked a very simple question that is going to take me back to the economics 101. Okay, so let's even understand what's going on here. The FX market has now been liberated. What that means is that it's floating, and I think it's got a lot of I would like to say buoyancy. Yeah, it's got a lot of buoyancy to float, and it's floating up into heaven. Now, let's even start. What are the drivers of the FX market? Now, I'll give you an analogy to drive it, and that's for the benefit of the average person that's listening out there. First and foremost, we have the parallel market, we have the official markets. Now, here's what happens. I'd like to categorically say that both of them are Siamese twins. And I'd like to contextualize my answer. First and foremost, I can imagine on day one that the official market says it is selling for, I remember the official market is not supposed to have government intervention, so it's just a bunch of buyers and sellers. I also remember that the official market now, all those, I think, 20-something sectors, 27 or thereabout, that were not allowed, 20-something market segments that were not allowed to benefit from the FX market were completely removed and allowed to now trade. So what do you have? You have a floated currency with no supply hedge, and then demand outweighs supply. What that means is that because demand has outweighs supply, you have a seller's market. The sellers determine the price. That's the first thing I want to put very clearly. And so now, also, the next thing I want you to establish is this, that there's something called economics of psychology, and that happens in the stock market. What do you think happens when, happened when Elon Musk Tesla tweeted about some things he had, even when the plans had not matured. And it's because of that singular tweet, his share price started going up, and people started buying because they thought it was real. But it was real, but it had not been put into effect at all. So it was not something to tweet. It was premature to tweet about at the time. The Securities Exchange Commission said, no, whatever you do has consequences on people's emotions, and they would go ahead and make decisions based on that. The same thing happens when the Feds in the U.S. announces their increase or decrease in in their interest rates. You see what happens to the stock market. Those two factors that I've established, let me bring that home. Now, on day one, you find out that a seller says, I'm going to sell for 1,000 naira for my dollar for this amount of volume. And then a buyer says, I need this amount. I'm not buying for 1,000, I'm buying for 800 naira. That's what determines the mean and the max price for that day. And then you have different interactions of bidding until sales are closed at different rates, up until the final closing price. Now, what do you think is going to happen in the black market? The guy that is seeing that the dollar closed at 1,000 in the official market is saying, oh no, dollar is 1,000 official market. I'm going to sell for 1,100 naira, nothing more. Once that price goes round, everyone is like, in Abuja is 1-1, in Lagos is 1-1. That is the price that governs the day for the black market. What do you think is going to happen the next day? On the next day, the official market is like, wow, can you imagine I sold this much volume for 1,000, and if I had gone to the black market, I would sell it for 1-1. Okay, I tell you what, I did 1,150 naira. And so I've just told you a chain reaction, and it goes on and on and on. So they keep checking themselves. They keep comparing notes, trying not to be cheated. Now, in between there is the gap for speculators. The speculators are saying, well, do you know what? I can actually hold some of my dollars, sell in a month, and make double the money I would make if I sold it today. So you've now brought in a volatility that is exposing the market to speculators. Now, what the question in your mind is, wow, it's such a complex thing. What are they going to do now? I'll tell you what we can do. First and foremost, freeing the market without supply hedge imperatives was a big mistake. We shouldn't have done it. What we should have done is, I know where this came from. We had at a time, recall that during the Buhari administration, there was a time that we could not even get foreign loans anymore. There was a time that our secondary Eurobond market was crashing. So this government came in with a capitalist mindset, saying that they wanted to, come and fix our market and make it more efficient. But with that came the fact that we took advice from the international community for us to float our currency without the right risk response protocol in place for such a risk. What is the risk here? There are two categories for risk. The probability, factors for risk, the probability and the consequence. This is a high probability and a high consequence. It's a red on the economic radar. And we don't have a response to it. How do I know? Because we should have had our response protocol implemented at this point in time. Now, the same international community that told us to float our currency, that it is overvalued, are now saying, oh, the fair value of the naira is between 600 and 700 naira, is completely overvalued. What were they thinking? Without the right supply hedge, we would be open to speculators, we'll be open to people that are just committing economic sabotage, like I explained. Now, the question in your mind is as complex as it is, what is the answer? I have a very simple answer. The answer is this. In the short term, okay, the quickest answer anyone will say is forex earnings, boost this, but that is not something you can do overnight. The first thing to do is I would exclude some non-critical sectors from the FX market temporarily. Those sectors, I would exclude them. And I'll quickly exclude them for the reasons is this, because if I do any intervention as the government, and if you don't exclude those guys, your burn rate for burning through $500 million, dollars, for example, is going to be in a matter of less than a week. You're going to burn through that amount, and you're back to square one. So I would exclude them so that any dampening effect I put in is going to have a long-lasting effect in the market. The second thing that I'm going to do is that I'm going to plan for me. I will intervene very badly that I would make sure speculators pay badly. What does that mean? The moment I start intervening, after excluding a section of the market, just to shrink the market, to make sure that those sort of reverberation effects of the volatility is, reduced a bit. The next thing I'll do is to intervene into the market. Now, let me tell you what is going to happen, IK. The moment government pumps in money to that market, and people hear that, there was the government is now inducing the market so that the dollar on offer on the official platform for sale for 800 naira per dollar. The guys that were actually facilitating that economic sabotage, and those guys that were speculators who quickly rushed to sell their dollar at even 750 because they don't want to be caught on the losing end. That way, I can play a reverse psychology on the market and get speculators to pump in that money so they don't lose. Once they pump in, they are going to help me with dropping the rate of the dollar further, and they'll do that. Now, when they drop it,
Dr. Wiz, forgive me. All of these explanations is given, especially with the FX situation. Isn't that what the CBN is doing with all the interventions, with all the monies the CBN has been, pumping in?
No,
I mean, if we look at what the CBN has been doing for well over a week to two, it's almost similar to what you're saying.
No. I'm getting there. Let me get to the end, and then I'll tell you what they're doing differently. Now, by the time you pump in that money into the economy and you crash the rates down significantly, what you then do is to introduce a floating peg, because we've now seen the experiment that it is not sustainable to keep floating in the long term. Now, when you introduce, floating as of now, really, I'll rephrase that, floating as of now, because we don't have the supply age. We can go back to floating when we have the supply age. You're asking me, is that not what the CBN is doing? No, sir. The CBN is not putting money into the demand and supply segment of the dollar economy. What they are doing is to pay back the backlog that is owed. That backlog is headed for a capital flight. It's headed back to the jurisdictions that the mother companies are coming from. It is not it's not taking part in the exchange on the official window. What I'm talking about is putting the money into the exchange window and crashing those rates until such a time where you can establish a reasonably fair value for our currency, and then you put back a peg and say, well, we've established for a month that the naira is going to be selling for 700 naira or 800. We can put back the peg at 700, and that's the exchange rate. That's what I would do.
How do Nigerians benefit from this interplays? Because, I mean, listening to you sounded more like an FX expert for a bit there. I almost thought maybe you've left the oil and gas business. I mean, your explanation was so very, very coherent and clear enough. But then, what is the benefit for Nigerians here? Because all these interplays, these explanations you're giving, we are not very familiar with it. We just want regular supply. And then affordability. That is the concern for every Nigerian. So with all these interplays, are we going to benefit anytime soon from this, especially in the area of pricing and supply?
No, I don't think we're benefiting. I tell you what, I had a message from some of my suppliers saying, whatever you want to buy, come and buy. We're not stocking anytime soon until the FX things happen. And that's not just one person. The reason is this. They feel there is a limit to which we can sell an item and people are ready to buy. So when the FX drives you to a price point where people cannot afford, and you know they cannot reasonably afford, they're more likely, the attitude is more likely to jump on cheaper alternatives. They'll just tell you, look, we're not going to buy. So one, we're going to have a lot of items out of our shelves. That's just a short-term effect of this interplay. Because I told you the answer, but I didn't tell you how long it's going to take us to get there. I know I said a month of intervention, but that is a month after you have all the appurtenances to start your intervention. If you don't have your appurtenances, I don't know how long it's going to take the government to come to terms with the willpower to intervene in the market and put back the floating peg. But for now, I see Nigerians go to cheaper alternatives. I see in some parts Nigerians are already reacting by stocking, those that have the money and can do what we call strategic stocking. They're already doing that. And then I see Nigerians are already cutting down hardly, and I'm not trying to be insensitive. I do apologize because I know a lot of people have cut to their limits and there's nothing more to cut. I sincerely apologize. I'm not the government, but I feel the pains of every Nigerian. I'm feeling the pains as well. So no, it's not going to benefit Nigerians anytime soon. More so, I think what Nigerians, I like to tell Nigerians is that the market is very volatile. I tell you what, there was a vitamin that I wanted to take, and I found out in a shop that vitamin goes currently for 68,000 naira. Now, one mind of mine said buy, the other mind said, look, what if there is someone who has bought this item back then? Because I asked them when they restocked, they said they just restocked 2 days back, and has it for the old price. And I kept combing. And lo and behold, it actually paid off. Eventually, I found the same item for 28,000 naira. So what I'll tell Nigerians out there is there are no fixed pricing for products. It depends on the exchange rate that people had bought it at the time and how their philosophy. Some people just want to sell and exit maybe any FX-related market. Some people want to sell and go back and buy. So what that means is that there's going to be a lot of price variations for the ordinary products that we'll buy and consume. So take a little bit of pain, a little bit of patience, identify those sellers that are giving you good discounts, going more into strategic procurement. If the guy is close to you and not selling it affordable, cast your net wide. The internet is a very good place. Facebook, social media is a very good place to cast your net wide and find a bargain. I currently do that at the moment. All the way, I buy things all the way up to Lagos. When I'm in Abuja, I buy things all the way to many states, depending on what the price point is. So I just tell us, let's keep an open mind and just try to get it. Remember, necessity is the mother to invention. We have a necessity. We got to survive while the federal government comes to terms with what they're doing, and we have to be a little bit more strategic.
Dr. Wisdom Enang, I really wish we could go on and on because, of course, I was going to ask the next question, which would have been, where is gas in all of this? I mean, if we're having this much problem, where is gas in all of this? But that will be another conversation for another day. I must thank you at this juncture, Dr. Wisdom Enang. Thank you so much for being my guest and for making sense of this very complex situation. You've been able to break it down and simplify it, so much so that you even preferred FX advice, as though you're an FX expert. Thank you so much, Dr. Wiz.
Thank you. Do appreciate and enjoy the rest of your day.
It's a pleasure having you always. Well, for you, the viewer, we've been able to look at the complexities. I mean, for once there, I was lost. I mean, when you're talking about the oil and gas situation, and then you see the interplays, you see the FX, and you saw the way my guest, Dr. Wisdom Enang, explained everything. Well, at this point, I must say thank you so much. This is where we'll draw the curtain. Let's do it again tomorrow. Until then, we'll continue to hope and pray for a better tomorrow. God bless Nigeria. My name is Ikechukwu Jue. It's bye for now.
Let's talk security, current affairs, governance, politics, your view, elections, rule of law, economic issues, foreign events on the Talking Point. Talking Point, weekdays on this channel.